Hey guys, how's it going? It's Andy from Magoo Investing. Happy Tuesday. Today we're going to be talking about a stock that was requested in the comment section of a previous video. So if there's a stock you guys would like me to cover in a future video, be sure to leave your suggestions in the comment section down below. So today we're going to be talking about Tattooed Chef, ticker symbol TTCF. This is a stock that I have not seen talked about a lot, and it has been requested a couple times, and it has popped up on my suggestions for some other YouTubers talking about it. But I really wanted to dig into it today because this is a company I think is a pretty solid competitor to something like a Beyond Meat, a company that I've been very bullish on in the past couple videos as being a fantastic company to invest in for a long-term potential. And this is a company that has done relatively well since it has gone public via a SPAC acquisition back in October of 2020. So as always, today's video is going to be broken up into 3 parts with timestamps in the description if you'd like to bounce around. The first part of the video, I'm going to be talking about kind of what the company is, talk about the numbers that have been released via earnings reports or just the future guidance. Part 2, I'm going to be hopping on the computer and talking about where I see as being a decent opportunity to buy in based off of what I see for the technical analysis. And then part 3, I'm going to talk about what I think about the long-term potential of something like a Tattooed Chef compared to a main competitor like Beyond Meat that I've been very bullish about in previous videos. 2020 has seen a lot of changes for the ways that companies have gone public. In the past, companies have gone public via a traditional IPO process. But in 2020, we have seen a major switch. From the numbers I could find, there were 219 SPAC acquisitions, which raised a total of $73 billion. And from the numbers that I could find, this is the first time that the SPAC acquisitions have raised more money than the traditional IPOs that only brought in $65 billion. So this has become a very popular way for companies with high growth potentials to go public in a relatively quick manner compared to the traditional IPO process. So Tattooed Chef was one of the companies that did this. They went public via a SPAC merger back in October of 2020. And since that point, it has been a very exciting stock. Usually when you see the SPAC companies, they have very volatile moves. But compared to a lot of the other ones that we've seen with some well-known companies like DraftKings, Virgin Galactic, Nikola, Tattooed Chef has been relatively calm in the kind of ways that it's been moving. If you don't know what this company is, Tattooed Chef is a company that creates plant-based frozen food products. I've only had one of their products in the past. I had the cauliflower pizza a couple months ago, and I gave it like an 8 out of 10. But the whole reason that you're trying to invest in this type of sector is that there's explosive growth potential, and this is a place that people aren't looking for complete alternatives to maybe some meat products, but they're looking for products that are potentially better for the environment and taste relatively similar. So as of right now, I would give this a thumbs up, even though it was not the best thing I've ever had. As I mentioned, TTCF went public back in October, and since that point, there has been some drama surrounding a major company shorting the stock. Kerrisdale Capital, which came out and said that they were shorting the stock back in early November, and basically the reason that they were doing it is they thought that some of the numbers that were released about the company for the guidance going forward were overly optimistic, and there have been some shady things that companies have done by shorting companies. Just look at the GameStop situation. But basically, the company comes out and shorts the shares, releases some negative things about the company, and in theory, the stock price will go down. It got to the point where the short interest for the company was up to 41%, which is extremely high. But since that point, the numbers that I could find from the middle of February, it's down to 8.7%. And this comes after the company has doubled down on some of the numbers that they released when the company originally went public. And the stock price has remained relatively high. And we've not seen the major short squeeze, but we have seen the stock stay relatively high. But let's talk about the numbers, because this was the main reason why the company was shorted in the first place. The first 9 months of 2020 saw an 87% growth in year-over-year revenue. This is an incredible number. When I look for well-established companies, I want to see double-digit year-over-year revenue growth. But since this is a relatively new company, it kind of makes sense that they would have explosive growth within the first couple years of being a major company. And that growth has come after spending $0 on marketing overall. So this is a number that seems a little strange. I don't know why they would spend $0 on marketing, but the company has come out and said that they are going to be spending on marketing in 2021, so this should see future growth for the company. They've grown their revenue at a compound annual growth rate of 68%, which is incredibly high. As I mentioned, relatively new companies, so it makes sense to have that high of a number, but 68% for a company that's been around for a couple years is extremely impressive. And this graphic shows how quickly they've been releasing products since 2017. And it makes sense based off of their revenue growth that they would be releasing a lot of new products, but just to see it on a graphic, it's pretty impressive to see all the products that they're putting out. And this graphic shows how many locations that their products are being sold. And they saw a 155% increase in the locations sold from 2019 going to 2020. And based off of the numbers and their goals for 2021 of reaching 65,000 locations, that would be almost a 3x increase in the number of locations sold. So based off of the numbers, there is a lot of growth potential for the company, and the contracts that they have and the locations that they're being sold are major places like Costco, Walmart, Target. So these are major companies that have a lot of reach around the country, and there are places that a lot of people go to shop. So the growth potential seems very possible for them. And the graphic that really caught my eye is that they're expecting to not only 5x their revenue in the next couple years, but they're expecting to increase their gross margins up to above 35%. So anytime you see a company that's increasing their revenue, you want to see if it's impacting the amount of money that they can bring in. So based off of the numbers that they've been releasing, it seems like they expect to be able to increase their revenue significantly and also be able to make more money and be more efficient at the turning revenue into actual income. So all of the boxes that I look at for the growth potential of a company have all been checked. So, and then let's look about the overall industry, because this is an industry that I've mentioned with Beyond Meat that has a lot of growth potential. And as of right now, the plant-based frozen food market has a market of around $5 billion. And the numbers that I could find is that's expected to reach $74 billion by 2027, which would result in a compound annual growth rate of around 12%. So this is a relatively new industry. And this is a company that has got in relatively early. You have companies like Beyond Meat and Impossible, but there's not that much of a competition at this point. It's going to explode. And since they've been able to get in relatively early, there seems to be a lot of growth potential for the company. So let's hop on over the charts and I'll talk about what I see as a potential entry for this company, because as I mentioned with an SPAC, there is a lot of volatility. So the company has been moving a lot since it's gone public in October, but I think there are some interesting spots that you could consider to buy in for my portfolio, and I wanted to talk about what I see there. Okay, so here we are looking at the charts. As you can see, things have been very interesting for the past year. So this is when the company first starts going public back in the fall of 2020. So you get this boost up as the announcement's made, pushes up, falls. Here are three kind of zones that I'm looking at going in to 2021 as being potential entries. I have this as the upside potential going up to $26, maybe $27, but the area that I'm looking to enter potentially is around the $18.90 mark. If we get to the earnings report next week and things go poorly, if it stays above this level, I think that could be a fantastic entry point. Also, the very bottom that I'm looking at is around the $15 mark. Some of the articles that I've been seeing online talking about the price targets for this company or the fair value is down around $15. So I think a potential entry could be around the $18.60 or down to $15 if it falls that low. But based off the numbers that I've been seeing and the way that it's respected the 200-day moving average, which is this yellow line over here, so far it seems very bullish. We had some sell-offs recently, but it seems to have bounced nicely out of this zone. So there's always a potential that if you wait for the perfect entry, you're going to miss out on some short-term gains. So as of right now, I'm going to be waiting to see what happens with the earnings report, because if it can stay above $19, I think it's a fantastic idea for a maybe potential short-term play, or depending on how bullish I am in the long term, and especially from the numbers that come out, I think this could be a fantastic entry around $19. So let's talk about what I think about Tattooed Chef, because the numbers that have been released have been incredibly impressive. When I look for investing in a company for the long term, I'm looking for growth opportunities, and I'm looking to see what they've done in the past. And so far, Tattooed Chef checks all those boxes. They've seen incredible growth in the past couple years. They're in an industry that's relatively new and is expected to grow at a compound annual growth rate of 12% through 2027. And all of the numbers that they've released have been incredibly impressive looking forward. The fact that they expect to increase their revenue at a compound annual growth rate of 68% is nuts. I don't think I've seen a number that high before. As of right now, I'm not sure if I would put it above something like a Beyond Meat. Beyond Meat has been around for a little bit longer, but both of these companies have fantastic futures when you look ahead. But as of right now, Beyond Meat is a company that I think I've just known about longer. One of the problems that I see with Tattooed Chef is I'm having a really tough time finding valid information and discussion about the company overall. I want to be able to look online and find information about the earnings reports and some of the numbers, but I also want to see other people discussing the long-term potentials of the company, because I think it's always important to look to see what other people are saying about the company. And when I do some research and when I Google the ticker, not that much information comes out. But I'm going to be very excited to see what happens with the earnings report next Wednesday on March 10th, because that'll tell us a lot about the long-term potential of the company, to see if they kind of cut back on some of their guidance. Anytime you see a company cut guidance, it usually results in a massive hit to the company. And if that happens, we'll have to see how bad it is, but I think that could be a fantastic buying opportunity, because I always like buying after stocks fall as a result of an earnings report. Because in my mind, people are looking too much at what's happening now and not looking enough to the future. So March 10th is going to be an interesting date to watch. Some of the valuations that I found put the fair price of the company at around $15. But when I look around the overall stock market, the valuations, looking at specifically price to earnings, I don't think that's a good way to look and value a company for the long term, especially for a relatively new company in an expanding market. So as of right now, I don't exactly know where I'd say the 1 year potential for this company is, but looking at something like a Beyond Meat, I think they're going to be on level playing fields for the next year or so. So let me know if you guys have a preference between something like a Beyond Meat, ticker symbol BYND, compared to something like a Tattooed Chef, and let me know what you thought about my analysis overall. Let me know if there's a stock you guys would like me to talk about in a future video, and I will see you next time.